Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10:02 a.m. this Monday morning here in Metro Manila. Happy Monday, guys. We're about half an hour into the trading day, 30 minutes into the trading day. Let's kick off with our banner story. The Bangko Sentral will likely keep key policy rates unchanged at its meeting on Thursday. This is according to 11 out of 16 economists polled by Business World. Analysts cited recent signals of a likely pause in easing from BSP Governor himself, Ben Diokno. Security Bank Chief Economist Robert Dan Rosas thinks the BSP is poised to let the 50 bips cut done last June 25th to settle into the system first, but five analysts are still betting on a rate cut of about 20 to 50 basis points, given the lag in the fiscal response and the wider GDP contraction in the second quarter. But Nomura is seeing an even deeper economic contraction for the Philippines amid the health crisis. Nomura Securities says the country's GDP may plunge by 6.6%, deeper than the previous forecast of a 4.8% contraction. Economist Euben Paracuelles said the cratering of the economy in the second quarter was led by the collapse in domestic demand, particularly in private consumption due to the lockdown. Moving forward, Paracuellas says the surge in unemployment and falling remittances would likely to continue to weigh heavily on the public's consumption habits. Let's kick off with some good news as we open the markets this week. Take a look at my terminal here. You can actually see the Philippine peso, the strongest when we talk about year-to-date spot returns compared to the rest of the Asian basket. We were actually second earlier on in the month, but we're actually now ranking first here. You can see on your screens here a 3.98% return year to date, year on year, compared to the rest of the currencies in Asia. The weakest right now being the Indonesian rupiah. Now, I just want to take a very quick peek at that and show you guys how we have been strengthening all throughout this year. Particularly last week, we saw the peso strengthen to a near 4-year high. And you can see on my terminal here that slide downwards. That is a good sign for the peso. This came about last year amid the news of a vaccine in Russia, wherein President Duterte was very open to us having that trialed here in the Philippines. And also, of course, the anticipation is of a possible relaxation of the lockdown in Metro Manila. The MECQ has been reimposed until tomorrow. So we're still awaiting news on whether that will be extended or whether the capital will be going back to a less stringent lockdown. This, according to Mike Ricafort of RCBC, the positive market sentiment. Apart from this, there was also, of course, more stimulus being debated over in the United States. That has likely also led to the dollar weakening and possibly the peso strengthening vis-a-vis that. Now, I do want to take a quick peek at the global equities and how they are doing. You can see on your screens here a very mixed picture over in Wall Street on Friday. That comes amid news that the United States and China are postponing talks, which were planned for over the weekend. So that had been aimed at reviewing the process or the progress rather. There's been a 6-month mark on the phase one trade agreement, and that has now been postponed. Now, some sources, according to Bloomberg, had said that's just a scheduling issue, but actually the talks are going to be continuing. But nevertheless, that has been in focus in terms of the US markets. If you take a quick peek at Asia and how it's been opening, pretty much on the back foot. You can see the Topix sliding by 0.5%, the Nikkei 225 as well. You've got, however, the markets over in China and Hong Kong enjoying some gains here. So a very mixed picture here. Just a quick peek at Singapore as of 9:51. So earlier on, that's actually in the in the green rather, up by 0.3%. Now, I did want to mention the fact that a lot of things are going on in the US because on Friday, they had released some data, and there's a lot of questioning about how the rebound is going over in the US. So retail sales had gained 1.2% from the previous month, but that had missed the consensus estimate for a 2.1% uptake. You've got industrial productions which had matched estimates and manufacturing production increasing higher than expected. So a very mixed picture still over in the US. Let's now move over to our domestic index. You're going to be seeing us sliding as well together with the rest of Asia. We are still, however, keeping our heads above 6,000. So we're at 6,015.30 earlier on, 6,012 right now. That's down by more than 1% in just the first 30 minutes of trade here. And you could see in the 3-day chart how we were actually on an uphill climb for most of the part of last week. And finally, we saw a bit of a pullback. Micro of RCBC saying that this pullback on Friday, however, was a healthy pullback because there was a lot of profit taking that had been going on. He's actually expecting the stock market, at least the index, to be trekking upward this week. So he's seeing resistance of up to 6,250, which might lead to even further potential. And another very interesting thing that you can observe in last week was the increase in net foreign buying. So you can finally see some bars of green towards the right part of my chart here. That's after, of course, a major sea of red that we've seen since the start of the year. You've actually got the 5-day moving average of net foreign inflows increasing to around $12.3 million. So that's well above the 20-day average, which we've seen at just $10.5 million. So this is, of course, according to the Philippine Stock Exchange. I do want to report one more earnings here that we got earlier on this morning. I'm going to take out GD Capital for you guys. And this comes amid a lot of news on the automobile sector. Take a look at your screens here. You're going to be seeing their second quarter net income down 95% year on year to 197 million pesos. That's significantly different from the Bloomberg terminal estimate of 1.5 billion pesos of net income for the period. Of course, these estimates, are moving very fast and possibly changing with the times. Now, this leads to a first half net income down 62%, so to 2.74 billion pesos in the first half of the year. So still in positive territory. However, you can also see the first half revenues at 52.62 billion pesos, down 48%. Now, this comes amid a report from CAMPI. So that is, of course, the Chamber of Automotive Manufacturers and Truck Manufacturers Association. They said that Philippine vehicle sales fell 35.4% year on year in the month of July to just a little over 20,500 units. Now, this is actually higher than June sales. So the upside here is that even if it fell year on year, it's still higher month on month. Nevertheless, the Jan to July total sales are down close to 50%. The target is a little over, less, around 41% of a drop. Groups of CAMPI have now submitted recommendations asking for support from the Trade Department. Now, speaking of transportation, we still have also the PAL that had released their earnings also earlier on. PAL widening their losses in the second quarter to a net loss of 11.55 billion pesos. That is versus a loss that it had already had last year of 2.5 billion pesos. Still, the revenues actually, up down by 89% year on year. And this, of course, follows Cebu Pacific, which we had already reported on last week. Cebu Pacific actually seeing a loss versus a profit. And I just want to take out the chart of the airlines to see whether this is actually moving those stocks here. You've got PAL actually gaining a touch. That's up by 0.04%. Cebu Pacific, however, feeling the pinch this morning. That is down by 1.8%. So we're going to check in on the markets later on. Again, in the broadcast, we've got Chinabank's Rastine Mercado with us. Okay, let me just scroll down and check in on other headlines we're watching this Monday morning. Domestic trade slumped 43% in the first quarter. That's according to the Philippine Statistics Association data. The total value of trade fell sharply to 125 billion pesos from 218 billion pesos last year. You can see on your screens here, machinery and transport equipment, which accounted for almost 36% of the total value, plunged 32% year on year. That's at 45 billion pesos. Meanwhile, food and live animals dropped 42.6% in value. That's despite volumes increasing by over 11% to 1.6 million tons. Now, double-digit declines in value were likewise posted by 6 other commodity groups, including beverages and tobacco. RCBC Chief Economist Mike Ricafort says these declines may be attributed to the global supply chain disruptions at the height of unprecedented lockdowns since the first quarter. But the worst may not be over. Ford says domestic trade likely performed much worse in the second quarter given the grim economic data released for the period that includes factory output, international trade remittances, and GDP. Finance Secretary Sonny Dominguez is urging lawmakers to further shorten the proposed grace period on loan payments to just 45 days. This is after the bicameral conference committee working on the Bayanihan 2 bill agreed to cap it at 60 days. Now recall that the original House proposal was to include a one-year debt moratorium for all payments. However, Bangko Sentral Governor Ben Diokno argued that this will severely impact the banking industry in terms of liquidity. For Diokno, instead of mandating a one-size-fits-all moratorium, the government should just allow banks to deal with individual debtors. Recall that business groups were earlier pushing for the Senate version of the bill, which limits the grace period to just 30 days. But Management Association of the Philippines says the 2-month period is already a good compromise, provided that it is a one-time deal. Meanwhile, the Chamber of Thrift Bank says they will heed the provision on the loan moratorium. The DPWH says the Laguna interchanges of the Cavite-Laguna Expressway, or the CALAX, will be open to motorists that's starting tomorrow, August 18. This is despite the community quarantine affecting mobilization of the construction and manpower. NP Cala Holdings says the interchanges will provide easy access to and from the Laguna Techno Park and have an alternative route to Novali via Laguna and South Boulevard. This is expected to decongest the Santa Rosa Tagaytay Road and other local service roads in the area. The road junction will be operated using 100% RFID system, which will eliminate cross-contamination of the virus that may spread through coins and paper bills. The company is also planning to use RFID technology to the entire CALAX by November. The whole stretch of the expressway has a total of 9 interchanges that leads to the SLEX. And once fully operational, the 45-kilometer project is expected to cut travel time between Cavitex and SLEX to 45 minutes from the current 2.5 hours. It is the beginning of another week of anxiety as we await more decisions that can drastically alter the rest of 2020. Here to share with us where he thinks markets are headed, we have Chinabank Securities as Rastine Mercado. Good morning, Rastine, and welcome to the broadcast. Okay, Rastine, I just wanted to do a quick check on the sentiment this week compared to last week. Last week, we finally ended in the green despite Friday seeing a bit of profit taking here. What is the market pricing in now that you've got the MECQ set to expire, let's say on August 18, that's tomorrow? A lot are expecting us to be going back to a GCQ, at least in Metro Manila and the capital. Tell us, what is the market really pricing in right now?
Well, it is pricing in the two.
Okay, we're losing Rastine. I'm just gonna check with my producers here where he is. Okay, Rastine, I can see you on the stream. Can we try and get you back here? Rastine? Yes, he's still here.
Hi.
Okay. I think we're going to let you fix your audio for a quick second. I'm just going to quickly check in on the markets. Is that's fine, Rastine? Okay. Okay, we'll get back to you in 5 minutes. All right, now I just wanted to take a quick peek on some earnings we haven't actually broken yet. I did want to mention also more on the banking space, and we are, of course, having Chinabank in, but you've also actually got Chinabank releasing their earnings here. Just a very interesting part compared to other earnings that we've seen. The second quarter net income was actually up by 29% to 3 billion pesos. That's on the back of the second quarter revenues up by 53% year on year to 11.90 billion pesos. So again, joining the chorus of what we've seen as smaller second liner banks actually posting an increase in profits on the double digit front compared to the bigger banks that we've been seeing so far. Now let's try and see whether we can actually get Sir Rastine back on the stream. Okay. We will actually, yes, Rastine, can we do a very quick
Hello.
check? Okay. I think we're gonna take a quick break for the time being, and we'll get back to you and make sure that your audio is working correctly. Please stay with us and bear with us as we fix these technical difficulties. You guys are back watching Business World Live. I'm Danie Laurel. Now, we did experience some technical difficulties, but we're very happy to have with us back on the stream Rastine Mercado from Chinabank Securities. Hi, Rastine, and welcome back.
Hi, good morning, Danny.
Okay, so much better now. Okay. As I kicked off earlier asking you rather, what the market is pricing in today.
Mhm.
Last week we actually saw finally after 4 weeks in the red a sort of recovery or at least a rally, even if Friday was a bit of a pullback. Are we going to be seeing the same this week, especially as we anticipate what's going to be happening after August 18th?
Well, I think we did notice some strength in the market following the announcement of the second quarter GDP, which we all knew kind of was deep in the red. So even after other multilateral lenders and think tanks downgraded their expectations for GDP, we did see the market kind of pushing higher. So I guess it's really the markets moving into what 2021 expectations are. So in the short term, of course, we see the market kind of moving a little bit sideways this week following that strength. And of course, we're anticipating some volatility due to the upcoming decision on whether to extend MECQ in Metro Manila and some regions or not. But I guess the market at this point is pricing in that we won't be extending it, as we've
Okay.
seen some pronouncements from the government already saying that.
Okay, so let cross fingers that the market is right in that sense. Can you say that the market has priced in this GDP print already 16.5% and has started to revise its outlook on what 2020 will be? It was definitely worse than expected, but the reaction had not actually been as bad. I mean, we still stayed above 5,700 even after that.
Well, I guess it really is as we head in deeper into the second half, markets are really going to be paying attention to if the recovery that we're setting up in the second half is going to translate into stronger earnings recovery in 2021. At this point, consensus estimates are pointing to around 30% recovery in earnings. So I guess
Okay.
it's if any material change occurs that will alter that outlook, then we might see more choppy markets.
Okay, let's talk about specific sectors here, especially as we await the next BSP policy meeting. Consensus is basically saying hold, and that echoes the statements of the central bank governor himself. But there's also this issue on lawmakers still debating the rent reprieve. So it's a balancing act between how much the financial institutions can take and how much the economy needs. And now that it's being shortened and shortened from the 1 year that people were actually asking earlier on, what's the impact going to be? How do you find the balancing act between, giving more liquidity but also protecting the financial institutions?
Well, I think for one, it's much better that the cap is now at 60 days compared to the
Okay.
original 1 year that was proposed. It was always going to be a question of liquidity. So I guess we did see some grace periods that were enacted when Bayanihan 1 came into effect. So I guess at this point, what if the BSP is guiding that 60 days is a good second alternative, then it should be good for the sector as a whole, especially if this moratorium period goes down even further.
Okay, we've actually had still, despite the fact that consensus is saying hold, they're calling
Mhm.
for a hold in rate, you still have around 5 out of 16 analysts saying they see the central bank cutting as much as 50 basis points because of the
Mhm.
fact that fiscal has not really given its due compared to monetary policy. And we actually need a stronger monetary policy or a preemptive cut. Do you feel that this might actually be happening? And if so, is this actually something that we need in the economy right now?
Well, we did see a lag in fiscal policy. I mean, there is multi-trillion peso packages that are currently pending in Congress. So obviously, if there's a shortfall in terms of fiscal policy, monetary policy tries to bridge that gap. But again, if you look at it, our real rates are already in year zero, if you adjust for inflation. So any incremental rate cuts might not have more sweeping effects. So
Okay.
also one tool to look at is our potential RRR cut. So for this year, we've only done 200 bips.
Mm.
So and there is clearance from the monetary board of up to 400 basis points of cuts. So we also
Mhm.
might see some action there. So in terms of monetary policy in the meeting this week, we share the view of the consensus that there might not be any movement, and the BSP is still adopting a wait and see stance.
Have you felt any impact already of the previous cuts going into the economy? I mean, there is a lag, but has that lag already translated into at least better consumption or even loan growth?
Well, I think it's just one thing to look at also is how asset classes have been performing. So equity markets have largely already been buoyant. They've actually
True.
rallied. So that excess liquidity might have trickled onto equity markets. For the whole global financial system as a whole, monetary policy by central banks have lifted equity prices as well as other safe haven assets. For example, you have gold rallying in the midst of all of this uncertainty. So your strong markets might be indicative of all of that liquidity getting into the markets.
Okay. Rastine, let's move on to a sector that we haven't really looked at in the past weeks, and that is the mining and oil counter. That was in focus as Shell just announced their closure of one of two refineries here. Is that a very telling signal of the economy, or is that really a global phenomenon that is happening anyway? Something that is expected, and import prices are very cheap right now, so it's not really something that materially affects the market, or is this a
Mhm.
worrying signal?
Well, I think it's part of businesses coping with the effects of the pandemic. So as we all know, demand for oil went down. You see prices going down as well. So that might have been the reason why importing might be more attractive rather than refining it here. So I think it's part of fundamental business changes that are necessary in order to address the impacts of the pandemic. In terms of prices, the DOE has mentioned that They don't see any material impact on local oil prices, gasoline. So I think really it's just part of that fundamental shift in business strategy that comes with trying times such as this.
Will that fundamentally affect Petron's share price in any way, given that Petron will now hold the only refinery in the country?
Well, so far, I don't think it's going to have material impact. So I guess it's just a matter of what if there's sufficient, if there's an improvement in your cost efficiencies, then obviously those players will be the ones leading in terms of industry players.
Okay, so they can still anyway, produce it, not necessarily produce the same amount, but import the same amount to make up for that. Let's talk about the mining sector, which of course, because the lockdowns had a bit of an impact in terms of production. But you also see some metals rallying because they are considered safe haven. So you've got, for instance, nickel prices going up during the pandemic, gold as well, surging. And we also mined those gold. Do you see some sort of uptrend here compared to, let's say, last year when we didn't have these rallying prices?
Well, I think in terms of rallying gold prices, obviously those companies that have exposure in that part of the mining sector should have some short-term tailwinds as prices go up. But then again, it doesn't necessarily signal a fundamental shift in gold prices and gold suddenly becoming a very hot commodity over the long term. So obviously we see gold prices as safe haven assets. So given that you have ballooning valuations in global equity markets with muted earnings growth, then that increase might just be borne by the shift to by rotating funds into other asset classes. So down the road, when things normalize, obviously we see base metals kind of rallying if the outlook for economy picks up, because obviously base metals are a good indicator of or the raw materials for construction. So if we see a sustained increase in those prices that's not brought about by supply shortages, then it might be a good sign that the economy is indeed on the way to recovery.
Okay, so it's not necessarily a function of the economy, but really just the safe haven assets and the flight to that. Let's talk about the air rate. And there's so much news on that. There was a lot of excitement, and the share price went down during the first trading day. I think it's still down. We'll check on that quickly. But now the SEC has started an investigation over some complaints that brokers were actually not able to file the correct registration to trade this, but they've actually said they can now do that. So they've reversed course, and that's going to be okay. Can you see that this was the reason why the share price was below the IPO price, or is this something that you had expected already?
I think, well, for one, REITs are the different asset class altogether. So recently, you've had IPOs such as Mart that have actually ballooned in prices due to some pent-up demand or bullish sentiment. So I guess some short-term traders that were kind of expecting the same thing to materialize, and when it didn't, kind of looked for the exits, right? So that could be one of the reasons why share prices are lower. The second is to a certain extent, maybe the inability of some brokers to process these trades might have contributed to that. But then again, on the flip side, buy orders from those brokers could have also potentially buoyed prices, right? So it's hard to say for certain what the effect is going to be. But then if you look at REITs, the important thing to look at really is more yield, right? So at 24, your yield is around on 2020 projected dividends. It's around north of 5% returns in dividend yield. I mean, so it's the lower the prices, the better. For so long as obviously the rental income from the underlying properties continue to progress as expected.
Okay, so it's just a matter of waiting out actually when those yields are favorable for you compared to other equities in the market. Just a very quick peek on the terminal here. We had showed that earlier that the A rate is actually gaining 7.7%. Amid all of this news, it's now trading at 25 pesos and 95 centavos. Now, I want to move over to Dito Telecom and the telco industry. Dito has named former PLDT Chief Revenue Officer Ernesto Alberto as the president. So effective today, actually, that takes over Dennis. Uy, was this a welcome, appointment? Was this a shocking thing coming from PLDT? Is this the natural course? And is there going to be a significant interest in Dito now that he's at the helm?
Well, it's always good to find to have somebody who's been in the industry for so long with that experience coming into companies, especially as a third player kind of grows and comes along, right? So I think the experience that he brings with him will be beneficial to the rollout of services of Dito. So I guess that will also kind of fuel market interest in the issue, especially as we near the ramp up of its services. I think they have commitments to have a certain percentage covered by early next year. So I guess having somebody with experience in the telco space working towards executing that plan is technically a market positive.
Okay, was the market reaction even ahead of that, and even amid all of the statements of President Duterte during his SONA against the telcos? Was this all sentiment driven, or is there not a fundamental, let's say, reason to buy into these telco shares right now, even with the regulatory issues?
Well, I think one thing that came out as a positive after the SONA was the streamlining of the permit approvals for putting up towers. So I think that's one good thing. But in terms of need, telcos have relatively been more resilient because of the inherent demand for its services, considering that obviously we're communicating more digitally now, the need for more data. So that's a positive for all of these telcos. That's why we've seen their stock prices kind of going up. So I think for so long as they continue to ramp up services and improve the quality of their services, then we shouldn't be too worried. Although again, regulatory concerns are always a headwind in any industry, right? So hopefully that abates over the course of the next few months.
Okay, so the worries and anxiety of investors right now have been tamed with the rollouts of the at least the LGUs now participating in the rollouts of the towers. Now, just before I let you go, just want to congratulate you guys. Chinabank, of course, 100 years of service to the Filipino people. Tell us any way that you guys are celebrating.
We're actually celebrating, obviously not physically because we're still observing stringent physical distancing measures, right? So I think one thing that we did disclose is that there was a stock grant for employees as part of the Centennial celebration. So I guess that's a way of showing that we as owners of the bank itself, the prospects ahead are potentially good.
Yes, and you guys are actually participating in those profits and prospects ahead. So congratulations again, and thank you so much for your insights this morning.
Thank you for having me, Danie.
That's a first look into the business day. Today's Monday, August 17. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel, and we are Winners.